Welcome to the Technical Analysis webinar with AvaTrade. My name is Troy. I'll be presenting. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, just let me know. I'll be happy to try and assist. As always, keep in mind that no one trade is guaranteed to have profits. Each and every trade that you take has risk of losses, which is why you should manage risk in a way that makes sense with appropriate trade sizes, maybe stop loss settings, potential hedge positions to back up your primary moves. There are a number of different ways to manage your risk. We do have some unique tools in our web trader and our mobile app that we'll go over that really make your risk management much easier to carry out. So that's there to help you out, whether you're trading on MT4 or MT5. Our web trader and AvaTrade Go app can trade right on those accounts. Keep in mind, what we go over is meant to be educational in nature and not to be taken as financial advisement. Now, we mentioned there's risk. There's also a great potential for profit with each and every trade, which is why we're here, to hopefully go after those potential profits in a way that makes sense, that will hopefully improve your returns in the end. Now, quickly, what is technical analysis? Since that's our focus today, I know we have a number of traders that have experience, and you obviously know what technical analysis is, so we won't spend a lot of time on too much of the basics, but for those of you that are new to trading that come to the webinars, basically technical analysis is looking at the historical movements of the prices of a particular instrument that you're interested in trading on, looking at those movements on a chart like a candlestick chart, and looking for patterns that might lend to themselves predictability as to what might happen in the future. So you might be looking for support levels, resistance levels, trending patterns, breakthrough candles, etc. And so by recognizing those types of patterns, many times you can help yourself in formulating opportunistic entry points and exit points for moves you might be looking to do. And there are all kinds of figures and formations that traders look for in the candles, and really the ideas are infinite when it comes to technical analysis. But we'll look at kind of a holistic approach, large-scale approach, the main things that we look for in technical analysis to hopefully help you out with your P&L at the end of the day. Now, we tend to focus on manual methods of technical analysis because that forces you to understand what you're doing with the lines that you're drawing and understand why you're preferring certain entry points and exit points, whereas if you rely only on indicators to tell you when to buy and sell, you're not really understanding necessarily why. And trust me, those indicators are programmed to look back and read the same candles that we will be reading with our manual methods. I do recommend that once you understand how to read the candles, then you use your indicators to help solidify your trading strategy, maybe to confirm what you're already thinking. If you have any questions as we go along, or you want to share anything, please feel free to do so. I'm not sure what you mean. Can you please PPT? I'm not sure what you're asking me to do with that phrase. Maybe expand on that, and I could try and help you. Okay, so real quick then, before we get into the technical analysis, what exactly is going on today? The markets have been hit with a lot of fear, that's for sure, and it's largely related to the jump, I should say, in treasury yields, meaning the rate at which, if you buy bonds, treasury bonds, the rate that they pay you, the guaranteed return that you get, the yield that you get, has gone up in a way such that the equity markets, meaning the stocks, the indices, folks who invest in those are afraid that it's a sign of a potential large pullback in the markets. And so when the treasury yields get really high, they become attractive when there's fear on the markets. And so high yields elicit even more fear that those who are fearful will jump ship and buy into the secured bonds with a guaranteed yield and leave the stocks and the indices, etc. And so those yields were hitting the markets today. And then also you have to keep in mind that the US and other nations around the world are talking about for sure raising interest rates soon to try and stymie some of this hyperinflation that's been going on. And so combination of treasury yields being high and fear of the interest rates being raised soon around the world and other stimulus measures being pulled back to try and slow down the inflation, that's hitting the markets pretty hard. And so, yeah, too high of inflation is bad. And so measures taken like raising interest rates to slow that down in the bigger picture are a good thing, most likely. But in the short term, raising interest rates, businesses don't like that because it makes the cost of doing business more expensive. And so to slow down inflation, it's a necessary evil maybe to raise interest rates. And so with the understanding that that's inevitable, that that's coming, the markets are really fearful right now. And then you add in the treasury yields being so high, and it's like too much for many to resist to buy into those treasury yields and down go the stocks. So we see here kind of a bloodbath on the markets today. All the indices are in big red, dropping double percentage points pretty much. The volatility index is up over 20% right now, the VIX volatility index, otherwise referred to as the fear index. Yes, the PPT, you're talking about PowerPoint presentation. We don't spend a lot of time on the PowerPoint presentation. So most of our time is spent on the live articles, the live charts, live trading, etc. I'm not a big PowerPoint person. We just start out on it each session. Now, so with the fear index way up, the US dollar stronger. Why is the US dollar strengthening if there's fear largely in the US and other places around the world? And the answer would be because the fear is about interest rates going up. If interest rates are going to go up in the US, that strengthens the currency typically. So US dollar is strengthening and people are selling off stocks and indices, and you'd think gold would probably drop if these anti-inflationary measures are being taken with eventually interest rates going up. Well, if that's anti-inflationary by raising interest rates, then that is the opposite of an inflation fear. That's an anti-inflation fear. And so gold tends to go up when there's fear of inflation. If there's fear of interest rates going up, then you would expect gold maybe to come down. We'll look at the charts and see what's happened in that regard with gold maybe. Some more news that maybe it's not the greatest. U.S. home builder sentiment dips. New York State factory activity plummets. Okay, so maybe the effects of this hyperinflation are starting to really be seen. Okay, if home builder sentiment is down, maybe the prices went too high too fast, right? And if factory activity has plummeted, as this headline says, in New York, well, that's also a sign that maybe people are buying less things with all these high prices. And eventually the prices will price people out, and they just can't afford things if the inflation stays high for so long like it has. And so we're starting to see some negative headlines here, and boy, that's no good. Oil hits 7-year highs as tight supplies bite. That's more fear on the markets, right? Because the average person has to put more money into the gas tank, has to pay more money for heating expenses, etc., when the cost of oil and fuel is going up so drastically, so quickly, faster than income levels for most people. The cost of things have been going up. So you could see why there's fear on the markets today. Multiple angles coming in, creating this fear, whether it's fear of interest rates going up, fear of the Omicron virus that's still spreading, fear about home builder sentiment, factory activity dropping, or crude oil prices being too high. They're kind of all negative headlines right now, unless you're selling oil, meaning you have an oil field or an oil mine and you're drilling and selling oil, then you like the high oil prices. But for the average person, it's not so good. All right, so we're looking then at the app down here. Let me expand the mobile app, and we'll take a look at how we can function on the mobile app for those of you that are on the go. AvaTrade Go, as it's called, can be downloaded from our main website, or just search for it in your app store. AvaTrade Go, you'll find it. And what's nice is the features here, if we're talking about technical analysis right now, you might understand which way you prefer to trade right now with all the fear on the markets. The headlines say, hey, oil's going up on tight supply, but with all the fear of factory activity dropping and if interest rates being raised could slow the economy down a bit, maybe catching the high point on oil right now might make sense on a short, right? So you can kind of add a couple of those headlines together and think of an idea that, okay, if oil went flying up today, okay, it's nice if I was buying on oil on that, but it doesn't mean that it has to continue to go up. If you look at the bigger picture, and if the US dollar is going to strengthen with interest rates going up, maybe that helps to pull crude oil down and you take advantage of a high point on oil. So you can already have an idea of those sorts of things, that maybe you'd want to short gold if the dollar is going to strengthen. Maybe you want to short the Euro USD, or maybe you're looking at some other instruments like indices, but you might go into this understanding what you prefer to do. And then you can also take a look by clicking on this tab. And since we're talking about technical analysis, we can look at some of the advanced features in the app, and it's also on the web trader. We'll look in a bit at the charts. But if we look at market buzz, for featured ideas, analyst views, we get all kinds of fundamental and technical information. And so if we click on something like analyst views, we can bring up free signals that are available to everybody, okay? Many places you have to pay for signals. We give them free through Trading Central. Mohammed, you're asking why is gold coming down? If the US dollar strengthens because of anti-inflationary measures expected to occur soon, meaning increased interest rates in many places around the world, specifically the US has promised to do multiple interest rate increases this year. That's an anti-inflationary move. And gold is an inflationary safe haven. So when there was fear of low interest rates and the US dollar being weak, which leads to high inflation, then gold was going up. If the opposite now is expected to occur, with interest rates being raised back up, strengthening the US dollar to lower inflation, then it makes sense that people might sell gold. Okay, so that's kind of how that works. Gold goes up with fear, but not with all fear. Gold goes up with fear of inflation. Gold tends to go down with fear of anti-inflationary measures, like raising interest rates. Okay, so we see dollar index signal has been telling you to buy for hours now, and it makes sense. The US dollar was expected to strengthen with exactly the fundamentals that we already talked about. So as you look at these signals, it all makes sense. All the cryptocurrencies, the signals have been down for the past hours. And guess what? Cryptos have been dropping down for the past hours. Why? Because people are rushing out of riskier investments and buying into something like the US dollar, which is maybe somewhat expected to strengthen or rapidly expected to strengthen by some, as interest rates maybe will be raised. So we can see fundamentally why these signals make sense. And you can take a look at the signals and decide if you like the technical analysis that was done for you. So we can take our pick. Maybe I pull up USD Canadian. And you see the signals give you two scenarios, okay? The preference, which this one says long positions above 124.85. So as long as the signal the price is still above 124.85, then this signal is telling you that it's a buy. Okay, and you see here's 124.85, this blue line. You see it's a support level. You see the price here, it hit and went up. This is the support level. So they're saying as long as it didn't go down and break below this price, that the buy signal is still valid. And you see the green lines, those are the take profits. If it hits this price, they're saying take profit. You see that's the first resistance level. Resistance down, resistance down, resistance down. Likely this already went up and won, or broke the resistance and is on its way to the second take profit, which is up at the next resistance level up here. So they give you some alternate take profits. They also give you the price level at which it's not good anymore if it went the wrong way. In which case, they give you an alternate scenario. It says if it drops below 124.85, then it says to sell with take profits down here. So you'd say, why would I sell after it already drops below this price? And the answer is because it establishes a downtrend if it breaks this support level. So if it went crashing down here and broke the support, then the signal is saying, hey, we're wrong. Go with the alternate scenario, and that is to sell. So let's pretend the movement was here. You'd say, okay, I'll buy with my stop loss below this support level. If it goes down and breaks the support level, you can have a pending order waiting down here to sell. So you can buy with the preferred direction and have a pending order to back that up in case it goes bad and breaks the support level. So these signals give you primary preference and an alternate scenario. And all of the technical analysis and price levels are broken down for you. So if you don't have the time to search the charts, if you don't have the time to do your own technical analysis, or maybe you're not skilled at it yet, this is a very cool feature, okay? You can find all kinds of signals there, and there are other great features that are in this app that are also in the web trader that we're about to take a look at. Remember I talked about risk management features. Let's take a look at the full screen view. And so I'll leave the sharing of my phone, and now you all should be seeing my my full screen, the website here. And if you log in from this location, then you're in the web trader, which looks like this, okay? And the web trader has all of this same functions as the AvaTrade Go app. The things we were looking at, the Trading Central features that we just looked at are here, Trading Central. There's the Forex featured ideas, market buzz, analyst views, economic calendar. Those are all there for free on real accounts. And I think they're even available on most demo accounts in most regions. Okay, so I had a question already about gold, so let's look at gold. And let's do some technical analysis. Expand the chart here, scroll back, and these are one-day candles. We see it's a red candle today, dropping, but it looks like it bounced from the low, right? So let's go to the 1 hour candles. And this is what we see. Kind of a seesaw movement these past days, up and down, up and down, up and down, up and down. Today we had a plunge down to this level, this area down here. And we could say that's a new support area right down here, because this was resistance. Over here became support. And now as gold came down, it hit this price area and bounced back up. And now it's trying to decide which way to go. So not the most clear movement. And what I mean by that is it's ranging up and down, up and down. It has not decided on a big direction right now. Let's go to 2 hour candles. And many times as you look at the larger candles as opposed to the smaller ones, you can start to clarify your view. Okay, let's go to 4 hour candles. And what we see is this price level and this bounce gives us some distance before it hits the support again if you're looking to short gold, if you think the strengthening US dollar is the way to go. So if we go to 5 minute candles, then we might look for our entry point, if there's a preferred entry point. Now, you might say, okay, I want to short gold, but it looks like there might be a little bit of a correction going on where gold could climb. So in which case you could do a pending order. And you know, pending orders are very easy to set up in our app and on the web trader. What you can do is say, all right, if gold comes back up here near 1820, it might not, right? But if it comes back up near 1820, where this resistance is, resistance, then I want to sell. If that's how you feel. If you feel gold should drop, US dollar maybe is going to strengthen, but maybe after all the excitement today, there'll be a bounce back right now before further dropping. Let's say that that's your take on things right now. So then we'd say, okay, execute when price hits. This is how you do a pending order on the web trader and on our app. And again, it doesn't matter if you have an MT4 account or MT5 account, you can trade right on those accounts here. So execute when price hits. And let's say if it gets to 18.1950, which would be just below this resistance. So 18.19.5. Okay. Execute when price hits. So automatically that makes it a sell limit pending order. If you're in the MetaTrader platform, you have to know and call it the right kind of pending order. Here, you don't need to worry about those technicalities. You just tell it the price you want to sell from. It happens to be a higher price, so it'll make it the proper type of pending order, which is a sell limit, which you really don't even have to know with our platform. Take profit then. If you're selling from up here, maybe you expect it to come back down near where it is now, okay? Or you might go to larger candles and say, okay, let me look at 1 hour candles. And let's say if it does come up here and I sell, maybe I take profit just before today's low. We saw it dipped down here and then went back up. So maybe you say, okay, I'll take profit just above this low point today at 1807, let's say. So 1807. So you see how we're using the price levels, the support and resistance levels, to pick maybe opportunistic entry and exit points, but at the same time using the fundamental news to decide the direction you might prefer. Okay, so you might prefer to sell in this example, but you might not like the price that it's at right now. And that's where the technical analysis comes in to say, okay, I know my preferred direction, but the price isn't where I want it. So let me take a chance here in a pending order that maybe it'll come up to where I like it. And so now we take a look and you see the benefit of the web trader here. Take profit down here, stop loss up here. Potential profit then is, let me get this set. Actually, if I'm getting in here at 18.19, I need my stop loss up above that. Somehow I have the wrong price on the stop loss. 18.20. Let's get the stop loss above these points. So stop loss will be up here above this next resistance level, so 18.24. Okay, so stop loss 18.24. Okay, so now we can take a look and say, okay, I've got my stop loss. If I get this price here that I'm going after around 18.20, 18.19.50, I've got my stop loss up above that resistance and the next one up here, and my take profit before this first support level. And I still, looking at that, have potential profit about triple what I'm risking. Okay, by being patient with my entry point and waiting for the spot that I prefer, I can have a more ideal entry point and go after triple the potential profit compared to my risk. Now, I might say on my account, I'm willing to risk X amount per trade. And maybe that amount is, let's say, 500. Okay, and it would depend on your balance and your risk tolerance, what amount you want to risk per trade. But it's very easy. Once you know the amount, let's say I want to risk 500 per trade, now I can just increase my lot size. And you see it's immediately calculating my possible profit and possible loss as I increase the trade size. So maybe I go to 1 lot. And now I see my possible loss is 450, possible profit 1250. And if I said I want to risk about 500, then I can go a little larger than 1 lot, 1.1. And now I'm risking 495, potential profit 1375. So now my risk management is calculated for me. If I wanted, I could use AvaProtect, which would protect against any losses for up to 2 days for a defined time period, and the profits are yours. And that you just have a small premium cost if you use AvaProtect. Okay, so let's go ahead and I'll simulate. Well, no, this is supposed to be on sell. Somehow I missed. I clicked when I was changing the lot size. I clicked on buy up here. So let's go back to 1.1 lots. We know that's what we wanted. Very easy to reset. Take profit was down at 1807. Executing, if it hits 1819.5. And stop loss was up at 1824.5. Okay, there we are. Now we have the sell position prepared. The right risk and potential profit, exactly what we just outlined, and executing if it comes up to the price we're waiting for, and there's our sell. Okay, that's why it's always good to review before you place your trade, and the order window makes you have to press sell a second time down there to confirm. So everything worked out nice. We've got our pending order over here under orders, just waiting for the price that we prefer. Now, we mentioned oil as well, and that oil was climbing a ton today. So maybe we take a look at crude oil. And if anyone has an instrument that they want to ask to look at, feel free to ask. We'll look at crude oil and maybe one more instrument. So what's happening with crude oil? Let's go to 2-hour candles. Take a look at the movement today. And what we see is crude oil went rushing up, and now as the US dollar is strengthened, is pulled down. And that's exactly what we were saying. Crude oil was up on tight supply. And as we were starting the webinar, I said we could look to maybe short crude oil, even though the stimulus on crude oil has been up with the tight supply. With the US dollar strengthening, it could pull crude oil down. And it looks like that already happened. Crude oil has dropped from a high of about, let's see, a high of about 85 or so down to 84. So it's dropped $1 per barrel already. So our new resistance is up at 85. Now, what we can look to do, if you still think crude oil could pull down further, then what we're looking at here is a support level down here at 80. Okay, we see this was an old resistance here, resistance, resistance, then a breakthrough candle here, which is a larger candle than the rest of them. You see the momentum it took to break this price level, a large breakthrough candle, and then it becomes support here. So this area here in general is support. And this would be your upper resistance that it hit today. With all of the fear and the strengthening USD, perhaps crude oil could continue a downslide now, because we saw bad economic numbers out of the US with factory production in New York, with housing sentiment negative now, etc. And all this fear on the market strengthening the US dollar. If you say, okay, fundamentally, I think crude oil could drop. Okay, fine. We'll ignore the tight supply then, and we'll focus on the strengthening US dollar. If that's the way you want to go, I'm not saying you have to, but we could easily do a market move here then. We could sell on crude oil, and stop loss then would only need to be above today's high. So if you say, okay, stop loss at 86 per barrel, okay, that gets you above today's high by quite a bit. So if it hits 86, then you say, okay, I'm wrong. It's not dropping. If it breaks today's high and hits 86, don't have to risk much to get there. And if it truly is fear hitting and a strengthening USD, you easily could see oil come down near 80.5. So let's say 81, just above that support level. So take profit, 81. And again, this is based on the price levels, the support, and resistance levels that we see on the chart. And then also taking in the fundamental news as the way you understand it to be. So now the potential profit is a bit more than the risk, possible loss, potential profit. Now, again, if I'm wanting to risk, let's say, 500 per trade as my example, you could obviously risk the amount that makes sense to you for your account. So then all I have to do is adjust the trade size here, and maybe I say 0.5, half a lot. I see that would risk 930. So I know immediately now I don't want to take that trade size. So 0.6. I'm sorry, 0.06. We see it's too small, 112. So 0.35. Still a little bit large, right? Risking 650. 0.3, 555. So now we're 0.25. A little bit under, 0.28. A little bit over, 0.27. And there I'm almost right on my target of $500 risk, give or take a couple dollars, okay, to the stop loss price. So see how easy the risk management is. It's telling me how much has to go to margin to open this trade, the margin impact. So I know I need at least that much available in my free margin. And it tells me how much my possible loss is to my take profit. And I probably want to make sure I have enough to cover the margin impact and also enough to cover the distance to my stop loss in value. Okay, and I see my potential profit is nicer than my risk. And here we go. So away we go. We've got a pending order waiting for a better price. And we've got a market move going with the momentum as we see it now. A couple different takes on things. Okay, I have a request to look at US 500. That came in before the request for silver. I'm sorry. Silver, though, is probably moving very similar to gold. It's a precious metal. It's sometimes used as a safe haven as well. So probably silver being affected very similar as gold right now. So you can take a look at how we manage gold and think about silver in a very similar way. So let's look at the US 500 with the time we have left. And by the way, these webinars are all recorded as well. So you can find them by tomorrow on our YouTube channel. You'll find this webinar under the English webinar section. Okay, so US 500, let's call it the S&P. And so S&P, here we'll just type 500. US 500. Okay, very simple search tool. So now let's expand the US 500 chart. And yes, we see a lot of red. Down, 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 down. It's been dropping all day, and it's for the reasons we already talked about. So it's not a surprise that we look at the chart and say, wow, it plunged, what happened? We understand the fundamentals behind it, okay? So now the question is, if you didn't already take advantage of that, which I hope many of you did, I hope you saw the headlines that were there this morning and saw that, hey, US dollar strengthening, volatility index was up 10% early today. And when we started the webinar, up 20%. So it was there. The sentiment was there this morning. Could have been selling on these indices all day. Now, with that said, is it an entry point you want now? And we'll see. 2-hour candles. We see it's gotten below this support level here. This was a support level where it hit and went up. It's just below that. If we go to 4-hour candles, kind of taking an inside out look, we see by inside out, I mean smaller candles than bigger candles. We see it broke this support level here. The next support level is down here, okay, in this area where I already have a line drawn, right, either here or here. So we can put it right in the middle of those two, support and up, support, support, and up in the past. So it looks like as it broke this support level already, it potentially could come down to the next support level down here, okay? But at this point, you might say, wow, it's not an entry point I prefer to sell from where it's at now because it already has dropped so much. You could get caught in a pullback. If you sell now, easily could pull back up. But if you wanted to short this, then what I would say is stop loss could be very short distance right up here, meaning If it goes back above this broken support level here, then maybe you get out. So very little risk, and you could have your take profit down here just before the support level. So you'd have a much larger potential profit than risk. Okay, but I think there's a large potential here for, at least in the short term, a pullback where this could come up. And it might make more sense to say, okay, let me find a spot that if this does bounce back up temporarily, find a spot where I would prefer to sell from rather than jumping in now. So if you come up, you might say, well, here's a support level that was broken as well. Okay, this was support and up, and then it came down and broke that support here. And then it broke this support here. That's momentum. That's a lot of momentum. When it breaks a support level, comes down and doesn't even phase it, and it breaks the next support level too. But now we see it's trying to pull back. So if you're into wanting to short this, but you don't like the price, you could say, okay, I'll put a pending order that if this pulls back up to this old support level that got broken here, maybe this is the price where I would sell from. And so just below that would be 4,600. Okay, maybe 45.99 might be a spot where you'd say, okay, this could pull back up near 4,600, near this old support level, and just before that I could sell. So then you could do a pending order to sell it, meaning execute the sell position when price hits, and you could say if it hits up here at 45.99. Okay, and then you'd go in and put your take profit and your stop loss from that entry point, meaning take profit somewhere down here by the support level, maybe 45.20, something like that. And stop loss wouldn't have to risk much if you're getting in right before this old support level up here. If it goes above 4,600 and hits, say, 46.25, maybe you say that's it, I'm out, or 46.30. Okay, so let's say stop loss 46.30, and so now we see potential profit 79, risk 31. Now I can go about putting my trade size and say, okay, nope, that's too much of a risk, 2,325. If I know I want to risk only 500 per trade or whatever the case may be, then I need to put a trade size that makes sense for that. 0.2, almost what I'm looking for. 0.18, 0.15, 0.16, and that's got me at about 500, 496. So lot size 0.16. So you see, it's not always the same trade size, right? It depends on what's the distance from your entry point to your stop loss. And then you determine, well, okay, now what should my trade size be based on that technical analysis setup? If I'm close to this, if my entry point is close to my stop loss, then I can take a bigger trade. So if I'm doing a pending order, waiting for a more perfect entry point, I can take a larger trade and still risk the amount that I want to risk. Whereas if I took a market move right now and sold, I'd probably have my stop loss a further distance away, and I'd have to take a smaller trade. Okay, so it depends the distance to your stop loss as to what trade size you're going to take if you're trying to only risk a certain amount. Okay, so this tool makes it very easy to determine the proper trade size for the risk you want and the potential profit that you want. So there I set up another pending order. All right, and why did we do 2 pending orders and 1 market move? Well, probably because it's late in the day. If this was my earlier webinar, like on Thursday, we might be doing the opposite, 2 or 3 market moves, because the day was just getting going if we were doing this, much earlier. And the pending orders, we might not set any if we like the entry points, because if, look back on the chart, it'd go back 6 or 8 hours and you'd say, wow, yeah, we could have been selling right then without pending orders. Now, because it's late in the day and we're hoping for a pullback to get a better price on some of these instruments, we're doing some pending orders. The price on crude oil actually looked pretty good though. So we did the market move on that. And that's assuming you're wanting to short these. The fundamental news says, hey, shorting these might make sense. And so that's why we're focused on shorting these instruments, because of all the fear and the strengthening USD, etc. Obviously, you're free to buy from these low points now if you want to go against the grain, so to speak, against the fundamental news. I tend to try and avoid trading against the fundamental news when doing my technical analysis, though. So yeah, some of these are at great low points. If you want to buy, go ahead. But I find it hard to trade against the fundamental news, basically trading against the wind, so to speak. Okay, so any questions before we end things? And I see a couple questions already popped up. Let's see. Can I just give a buy order without other parameters? Yes, you can click buy, and you don't have to put your stop loss, your take profit. You don't have to program anything other than the trade size. Okay, so you don't have to program the stop loss and take profit, but you might think about doing that. Yeah, in the next webinar, Gaston asked earlier if you want to look at something other than the methods that we're using here. Mostly we're looking at some scalp moves here, shorter term moves, right, to go with the momentum as we see it now. If you're looking for longer swing type moves, longer term trading, if that's what you mean, Gaston, just let me know earlier in the webinar and we'll take some time to do that. By the way, that crude oil move could be a longer term move. It's kind of a swing move there. The question is, can we have these sessions on a daily basis? First of all, you should have an account manager. If not, request one. You can have some one-on-one sessions more frequently, but also my webinars are not the only ones. There are other webinars as well. So you pretty much do have webinars, I think, pretty much daily, sometimes twice a day. So take a look at the other scheduled webinars. Ask our support team if you don't have the schedule, and you'll see that there are others. I go twice a week, this time on Tuesdays and earlier on Thursdays. Yeah, good question. You're asking, can you buy on the US 500 now and hold it for several days? And yes, of course you could. As long as you have enough money to hold the position. If it's going the wrong way, as long as you have enough free margin, you can hold it as long as you want. If it's going the right way, certainly you can hold it as long as you want until it gets to the profit you like. There's no limit on how long you can hold a trade. And if you like the low points and you want to buy right now, by all means. Oh, okay, so if you don't have an account manager and you'd like one, just contact our customer support and or go to our online chat and request one, and they should be able to assign somebody to you. Okay. All right, everybody. Thank you for joining. Thank you for the good questions and the participation. It's really helpful to understand what you'd like to see and what you're thinking. It makes the sessions more productive for sure. So with that said, good luck with your trading. I think you'll see a lot of movement yet to come today. Maybe some pullbacks and maybe at some point here some continued strong momentum moves as well. All right, everybody, good luck with your trading. My next session is Thursday at 11 a.m. London time.